Right, good morning, everyone. My name is Simon Horner. I'm the Innovation Director at the City of London Corporation, and welcome to this Digital Sandbox Pilot Showcase Day. I think the most important thing I want to say is if any of you do have any questions about the pilot, about the sandbox itself, the architecture, the infrastructure, the participants, the team, the process, just get in touch. We'll cover as much as we can today. In particular, we're obviously focusing on the SME user case, but if you would like more information about the broader sandbox pilot and also what we're going to do next after this, yeah, do reach out. So I'm from the City of London Corporation, partnering with the FCA on this initiative. FCA colleagues will also be on hand to provide more information. Next slide, please, Teresa. Thank you. Yeah, so just for background, we accepted 28 teams across the whole of the 3 use cases. They are obviously SME finance, which we're talking about today, vulnerable consumers, and then also fraud and scams. And there'll be other demo days, other showcase days this week. I guess the SME use case day was particularly interesting for us because of the background, focusing on COVID as this pilot was, the huge challenges that SMEs have faced in accessing finance, the huge issues with getting lending where it's needed fast, using digital channels, which either lender or participant were less familiar with pre-crisis, and seeing what we can all collectively do to try and develop those channels, improve solutions, raise awareness of what lending solutions are out there. And that's really what much of this pilot has been about. So we have 28 teams. We're going to talk about six solutions in the SME finance user case today. The pilot officially closed on the 5th of Feb. So the teams have had 10 weeks to work on their solutions. And today is really all about showcasing how far they've come on the SME finance solutions. Next slide, please, Teresa. So the purpose of the pilot, we've been thinking about digital sandbox concept for a while. I mean, really, it's to try and create the opportunity for firms to test solutions, in particular, to try and create new synthetic data sets to test and scale solutions. But also, I guess, beyond that, building a sophisticated development environment with digital tools, but also opportunities for collaboration with peers and also mentors from across the financial services system, so that not only do we have access to data to develop products, but a whole suite of support to help them build their business, with, of course, the FCA on hand providing that regulatory angle as well. Next slide, please, Teresa. So for those of you who don't know, these are the key features of the sandbox. I think data is obviously one we've talked about and we'll talk about more today. You can see the other features on the slide. I guess in particular for us at the corporation, we're interested in the observation deck because really it's about trying to raise the profile, raise awareness of some of these solutions, give them as much kind of airtime as possible, whether the audience is the broader government, whether the audience is the business community, so they get more understanding, more visibility of these solutions. Mentoring from maybe incumbent financial institutions who stand to benefit or stand to partner on some of these solutions and use cases. And then even maybe beyond that, scaling, thinking about access to investment opportunities to bring some of these ideas to market. Next slide, please. So where we are now, so we've had over 800 registered users. So that's including the 28 teams, but beyond that, huge and growing ecosystem of other interested participants, observers, partners, mentors, investors, agencies, etc. All the social media chats are on there. The social media stats are on there. I guess the one I'd highlight is the collaborative element of the sandbox. It gives the opportunity for teams to work outside of their own individual businesses. So 100+ chat channels created to foster that collaboration, and it's that sense of digital community that we've been trying to build beyond the actual digital tools, the features of the sandbox. Next slide, please, Teresa. Thank you. So turning to the content today, so most importantly, hearing from the businesses that have been developing solutions. It's an interactive session, so each team is going to have 6 minutes, and then there'll be a short, sharp Q&A for those of you who want to know more about the product, the process, the next steps, etc. So do post your questions in the chat box, and we'll try and get to them all if we can, and we'll read them out once the teams have finished presenting. So without further ado, I'll ask David from Fluence to kick things off.
Okay, so yes, I'm David. I'm the CEO and co-founder of a company called Fluence, and we are AI implementation specialists, and we have a particular focus on applied linguistics. And the objective in any projects that we work in is to deliver either time savings or a combination of time savings and performance improvements by embedding document understanding AI into complex business processes that involve documentation. There are two particular components of the AI that are quite exciting. So it can process billions of words of any content and extrapolate patterns indicative of quality, opportunity, inconsistency, or risk relative to outcomes that are interesting to the company. And the other benefit is it can be trained to actually predict outcomes on new documentation based on, in this context, historic applications and patterns of reporting. So in this context, we're trying to risk profile companies. So the objective is to understand lending data. We had a couple of false starts because the primary focus of the Digital Sandbox is on synthetic data, which doesn't necessarily include commentary or documentation. But with the help of Ollie at Digital Sandbox, we were able to end up analyzing consumer complaints data instead. And what we're trying to do is to understand the macro level behavior of the industry. What are the lending priorities and red flags within the industry? What are the bottlenecks in decision making? And are there any industry or time related trends in the documentation? So the data that we actually ended up analyzing for the Digital Sandbox was the consumer complaints data, which came from the Consumer Financial Protection Bureau. And this is a map of 108,000 complaints that they have handled that contained documentation, that contained actual text within the complaint. And the color coding is us putting in, for example, this is harassment versus investigation, and we can start to extrapolate patterns in behavior within the large data sets. So the way that we can actually study this data once we've mapped it, it's actually very similar in respect to how the COVID variants are being detected. So we're effective using genetic sequencing techniques to profile the type of complaints that are being received. And what's very interesting about that is you can then start to overlay interesting metadata over the top of that. So what's happening in different corners of the map, how does it influence results, and how does it actually, does it allow us to actually risk profile whether a company is performing well or morally, or if there's any weaknesses in their process that make them a risky company. So within the context of this map, I've just zoomed in on one particular corner of the map, which is abusive language, which made up about 70% of all lending complaints. With a particular, there was debt collection data in there, but also vehicle lending data as well. And we can actually start to profile. So now I've zoomed a little bit further, and there's a couple of dots in red, and that, for example, is General Motors. And what we're able to do with this kind of data is to actually, or the next steps for this data, we don't have this data within the Digital Sandbox, is we could start to risk profile the companies themselves. So for example, how many documents landing into this corner of the map are indicative of bad future performance, in 2 years' time, for example. So with that in mind, effectively what we've been able to do with the data with the Digital Sandbox is to demonstrate our ability to demonstrate strategic oversight of what's going on within an industry or within a particular quarter of the industry. We can also show how it's possible to conduct AI-assisted company profiling. So we can actually show that the profile of complaints of a company can be linked to a particular outcome. We can also demonstrate, so the model is actually visual, so we can actually explore the map, understand why the AI is making the decisions that it is, and we can actually create company efficiency profiles, for example. And then finally, the tech stack held up, even though we were dealing in literally billions of words of content. So we've got a scalable AWS microservice architecture, which is easy to adapt to any new problem space. And we've actually got a hypercomputing environment that allowed us to build the model. So we're able to roughly process about 1 billion words per hour. So with that in mind, happy to take any questions. Okay, so I'm seeing about, are there any language limitations? So yeah, there's no language limitations. All languages in any language, not just English, all work to a very similar ZIF distribution, so like a kind of frequency of use. And we leverage that to sequence the documents that we're dealing with. So no, there aren't any particular limitations, not even for other languages. So I've just seen another question here. Give an example of a complaint coming through the system. So we actually weren't able to do our original use case, which is to actually process a claim because we didn't have that kind of data. So we were using lending data. So the best we could do is profile or risk profile the lenders themselves, using a kind of patterns of behavior in the claims that they would be that were being received on their behalf. So that's all we were able to do within this particular study. But effectively what happens next with this kind of modeling is that when we receive 50 or 100 complaints from an SME, we'd be able to say, this is a potentially risky one because we've seen this pattern of behavior in previous companies that have gone downhill or have gone up or are doing certain things that we wouldn't like them to do. So I'm just looking.
So there's one, sorry, you go for it.
Shall I talk about resilient AI? The system is is literally baked. There's about 7 trillion inputs into the model, so it's very, very difficult for any individual complaint to be kind of gamed in any particular way. And the other thing that you're just dealing in such vast quantities of data that we tend to have seen everything before. But there is an advantage in the fact that we can visualize the model. Is if something comes in and it looks rare to the system, then we can actually say you don't process this yet. We don't have enough data. So not only can we make predictions, we can also switch on and switch off the predictive capabilities if we don't feel it's relevant. So that actually answers the next question, which is, can it handle missing data? So I feel like I've answered 2 for 1 there. And yes, to be absolutely clear, we are profiling the lenders at the moment. We didn't have enough data within the data sets on the digital sandbox to actually do the original thing we were going to set out to do, which is to profile the claims and the applications themselves.
So David, one from the chat box, and just to reiterate Teresa's comment, do try and use the Q&A function on Zoom rather than the chat box. So how do you think this will be used in practice to help increase access to finance for SMEs? And that's from Matthew Patrick. Okay, so that's a very good question. The use case we've ended up running with is more of a regulatory one. So for example, the organization that supplied the data in the first place could be using this to profile the quality of the lenders themselves. So in this context, we can actually start to, based on triangulating, maybe they might receive 100 complaints from a particular company, we can profile those complaints and actually say this is a high-risk lender, for example, or this lender is not performing to our standards, or they are, if we've got metadata linked to the lenders themselves, we can actually trace that back to patterns of behavior with the types of lender that they're actually supporting. Any other questions I should answer? I don't know how much time we've got. So let me just check the chat again. Yeah, no, I think we're okay.
I've just seen one here about the economic business model. Yep. I'll just quickly answer that one as well. So the business model is adaptive. So we're an implementation company. So we work alongside, tends to be multinationals who are looking to implement AI-assisted business process. And we hold their hand through a 3-step process. So the first stage is a data audit, which is all we did within the context of this environment. Then when we start to embed outcome data, we can start to build models, stress test it, and then we leave them with a license to the software that then allows them to actually deploy that service live on an ongoing basis. And that's a kind of a SaaS revenue model.
Excellent. Thanks, David. Final call for questions for David, otherwise we will move down the agenda.
Could we analyze, I've just seen another one come in with from Marcus.
Yep.
Could you analyze
Yep.
documents that are not structured? Yes, we can. So we specialize in unstructured data. So from all the way through from university essays, for example, predicting the grade of an essay, all the way through to handwritten doctor's notes, risk stratifying patients. There's all sorts of different applications. And the idea is that we can then predict whether or not the form is as it should be, if there's types of complaints that have been made, or if there's types of forms that have been rejected for similar reasons before, or whether indeed the model actually picked up. So we can, even with handwriting conversion, we can even detect whether the system's accurately converted the handwriting. So there's all sorts of steps that you can take to improve the accuracy. And the worst thing you can do is make a false prediction. So there's a lot of steps you can take to just either pass it back to a human or to kind of risk profile the quality of the document itself. So for example, in an NHS context, half of it is, do we have enough information from the patient to make a prediction? So in different contexts, we do have to deal with a lot of unstructured data.
Thanks, David, and thanks, Fluence. Right, time to hand over to Ian and Simon from Open Banking Reporting.
Good morning, everyone. My name is Ian Dalglish. I am the Commercial Director for Open Banking Reporting. I'm joined on the call by my colleagues Ken Robinson, who's the Chief Data Officer, and Simon Cockle, who's the Chief Technology Officer. I thought I'd start with an introduction to where we were when we kicked off the process with the sandbox. And we set ourselves 4 key objectives. And we identified quite quickly that 1 was going to be a challenge, but 3 were most definitely doable. And we were successful in creating a debtor and creditor analysis, a peer group analysis, and COVID business model stress modeling. And that's down to a lot of support from the FCA, CLC, Alan Turing Institute, and the FinTech Sandpit. So a big thank you for those helping, in particular Ken, work his way through the objectives. So that was what we set ourselves. That's what we achieved. And what I'll do now is we'll run on to a demo of our solution, and I'll call out the areas within the demo that we've been able to take forward. So our OpenRep solution utilizes data from traditional credit risk sources, macroeconomics, open banking data, and the key area of our solution is access to real-time data from the cloud-based accounting packages. Now, traditionally, data sources from the credit reference agencies were historic, or are historic, and therefore by definition out of date. Whereas utilizing real-time data from the accounting packages, together with our advanced analytics and robotic automation, which is our IP, generates proactive alerts, actionable insights, and next best actions, enabling lenders to focus on their customer relationships. While OpenRep is relevant across a number of sectors, namely investment groups, business angels, procurement teams, insurance, and SMEs, our key focus at present is on the SME lending market across both banks and non-bank lenders. And in saying that, but we identify right up front that the solution we're creating here will really have to be offered to the SMEs very quickly to ensure there's an appropriate value exchange. But the demo I'm running through just now, excuse me, was designed for relationship managers within lenders. And on the screen, you can see what they would see when they went into the screen. They've got 258 SMEs, they're current lending, in arrears, and up to date. And there's 5 risk categories. Now we've got more than 5, but for the purpose of the demonstration, we're just articulating or demonstrating 5 here: money laundering through to fraud risk. And the relation manager would then kick on this one, we're going to conduct risk. And that brings up a list of companies that are being flagged under the conduct risk category. And it's important to call out here that it's not the open banking reporting risk category. The risk categories will be deployed on a bank-by-bank basis, and it's most certainly their risk categories that would be deployed. Now we can see what the current lending is. We've got the Experian credit score coming through as well. And if we click on Global Trends Clothing, it takes us through to what is the key area and the key benefit of our solution. We're bringing through management insight and actions, and it's designed so that a layperson can quickly come to terms with what the issues and challenges are of a particular SME. And what we're listing here is conduct, liquidity, money laundering, and trading. I'll come back to trading in just a second. But if we go to business, under business snapshot, you'll see that we've got aged debtors and suppliers. And that aligns back to the first objective that we set ourselves, which was debtor credit analysis. And the data that we've been able to take from the sandbox has helped us shape these particular widgets where we're able to give an SME and a lender a view of the debtors, suppliers, debtors and creditors, and be able to identify upstream and downstream where there may well be issues and challenges which they want to address earlier in the cycle. And the obvious one to call out here would be John Radisson, sheet metal. That would be one that the lender or the SME would wish to take action upon immediately. We can then go further down. We have the balance sheet, the profit and loss, and the cash flow. We have additional trends and forecasts, which will be useful to the relationship manager of the bank. And if we go into the profit and loss, you can see that this information is to hand as well. So you've got the P&L, again, underlying data and various insights and information, cash position here, and that just continues. So while this is not designed, the tool is not designed just to give access to this information, it's the management insight and actions. It does give the relationship manager the option to see the information very quickly. Now, come back to trading. If we click on that one, this takes us through to, it's coming up, this takes us through to the second one, which is the peer group analysis. And again, using the data within the sandbox, we were able to compare a company versus the peer group. And that enabled them to be able to, at a glance, see where they were not performing as they should be, or maybe overperforming. In any case, be able to get an insight and then be able to set a strategy to investigate what the issue or challenge was. Was there an issue that was causing them a problem, or was there a missed opportunity? But this information would give them that sort of insight, and it gives them a ranking within the peer group, which we're then able to articulate in various graphs.
Hi, Ian. This is just to let you know that we're at time, so if you could wrap up for everyone.
Yeah, and then coming to the third one, which was the COVID piece, which was the COVID business stress. We were able to use the sandbox data to be able to help identify customers during COVID that were at high risk and that the banks wished again to discuss earlier in the business cycle. And I'll stop there.
That's great. Thank you, Ian. Questions for Ian and the team at Open Banking Reporting, please. Okay, we've got one there. Ian, shall I read it to you? It's how would the app have access to the financials of all those companies?
Well, we are utilizing a third party called Codat, who are a data aggregator, bringing in the accounting data from the accounting platforms, and they pull that data in, but they pull it in a raw format. What we do is then take that data and put analytics on top of it, which creates the management insight and actions.
Great. And Chris asks, regarding peer group comparisons, how do you deal with the possibility of different entities having different accounting policies, e.g. for measuring values such as depreciation, stock valuations, etc.?
Ken, can I pass that one to you?
Yeah, sure. So in terms of identifying a peer group, it's been identified on some objective, I guess, less subjective measures, such as the turnover in the business and the number of employees and the sector. So it's quite an objective criteria in the example that we've presented. In terms of going into the particular values, you're absolutely right. There are a few things that we need to be very careful of. But we're taking from the P&L, and we'll be able to look at each individually to make sure that it is valid. But the measures that have been chosen, I think we've tried to keep away from some of these complexities at this point. It is a POC. We're trying to judge kind of what is the market appetite, but we believe that if we're able to work with a lender on this product, we'll be able to look at their portfolio and increase the understanding of that portfolio.
Great. We've got another question. Did you use any data from the sandbox in your presentation?
So we did. So we used the data for all of the work streams that Ian mentioned. So first of all, for the contagion, which is looking at the upstream downstream, from the account receivables file, we were able to look at the particular invoices. We recognize there's not a counterparty on the invoices, so we generated that synthetic ourselves. In terms of the looking at the peer group analysis, that was completely originated from the sandbox. And for the stress modeling, that was using the ONS business interruption survey to understand what was the responders. We know that's been fused onto the SME data set, and we use that for modeling purposes. So we have used it exclusively.
And finally, from Emily, how do you determine the money laundering risk based on data from accounting software?
So you're right. So understanding what might be an indicator, and we'd work with our lenders to understand what it is, but we would think about whether there's certain assets that might sit within the balance sheet in terms of what might be some of the text that might come through. Equally, we could see if there's any circular transactions that's working through the invoices and that's in through the invoice stack as well. I think these things are things that we will illuminate, but it's certainly, if there is an insight that is that we can find, we'll certainly be looking for it. And there are examples.
Sorry, I think I'd also add that to ensure that the data coming through the cloud-based accounting packages is as accurate as it is, whether that be for fraud, money laundering, then that our partners have got capability to vet that against open banking data. And be able to vet that the data coming through the cloud-based accounting packages is accurate.
Perfect. Thank you. I'm going to move us on now, but thanks to the team at Open Banking Reporting, and the questions can be addressed in the chat box as we work through the other presentations as needed. So I'm going to hand over to Adam Stones now from Company Watch Limited.
So good morning, everybody. I'm Adam Stones. I'm a data scientist at Company Watch, and today I'm going to give you an overview of our participation in the pilot. So just some context on us. We're a commercial credit reference agency based in the City of London. We serve a broad base of clients, particularly in financial services, so banking and insurance, but really anybody with trade credit or supply chain risk. And our main activity is to assess the financial health of companies, and we do that mainly based on financial data in the public domain. So our principal product is the H-score, which captures the probability that a firm will experience financial distress in the coming year. And historically, that's been very accurate, predicting around 90% of corporate insolvencies. So to give you a flavour of how that works, here I've got a single company, Tesco PLC. And you can see that in the last few years, its financial health has been steadily improving according to our H-score. And users are able to dig into the 7 factors that make up the score and see how factors how those factors changing has an impact on the main score. And it's really that explainability, that transparency, that's a key strength of our platform. And it's something that really runs through the entirety of the platform. So moving towards our participation in the sandbox and our motivation, there are challenges to working with publicly available data. In particular, there's a lag between the financial year end of a company and when it files its accounts. And mainly for SMEs, which is the subject of today, they often file abridged or even micro-entity accounts, and typically they're unaudited. Now, those challenges have been exacerbated by COVID. For instance, the government have extended the filing deadline for financial statements, but that comes at a time where really access to this information is really important because of the increased risks of doing business and also the need for SMEs to access short-term credit. So we acted really quickly as a company in incorporating macroeconomic data from the OBR in order to forecast our H-score and forecast scenarios on a sector-by-sector basis. So if I just go back to Tesco, you can see here that we've been actually able to provide a forecast H-score for the end of the last calendar year, even though their financial year until the end of February 2021 is still underway. And of course, the nature of risk is granular, and it's actually better to look on a company-by-company basis than on a sector-by-sector basis. And so we actually provide our users with the ability to just play around with those assumptions. And that's really a second key theme of our platform, is that users can use our platform as a starting point and then incorporate their own knowledge and expectations in order to stress test the metrics that we provide. Now, our ambition as a data science team is to develop improved models to better forecast company outcomes and company distress. And our big hope for the sandbox was that we would be able to use real-time data available in the sandbox to really engage with the fast-moving COVID situation and provide for a more timely estimate of credit risk. Now, working with the data in the sandbox was challenging at times because even though the transactional banking data had the kind of time resolution we needed for our use case, it was clearly synthetic. And speaking to the teams that made up the data, it's clear that any insights that we glean are unlikely to apply in the real world. But just to show you what we did do, I've got some cash flow projections here. So this is 5 companies in the sandbox. The solid lines represent their cash balances relative to the balance at the beginning of the year. And this widget enables me to choose a projection start date, let's say the beginning of March. And then the dashed line is the mean cash flow projection based on the activity prior to that date. And the shaded region represents sort of a reasonable best case and worst case scenario. And you can see as I move the projections further into the future, that uncertainty grows. So finally, I just want to give some areas where we have fulfilled our ambition and some tools that are already on the platform. So to begin with the tech score, so that complements the H-score in that while the H-score looks at the numbers in financial statements, the tech score looks at the text. And actually, that's a very good predictor, as good as the H-score, of company outcomes and company distress. Out of that comes searched. So searched, if you've ever used Company House PDFs, then you'll know that they're just images and they're actually difficult to read in any automatic way. So with searched, we provide searchable PDFs. And that means you don't have to read all of the accounts manually. And the possibilities for modeling and research that come out of that are enormous. And finally, Aphrodite. So it's actually possible for a single director to have multiple registrations at Company's House, and Aphrodite is a way of tying those back together, so you can properly see the history of the individuals associated with a certain company. So to sum up then, I just want to say that we've had a really positive experience in the sandbox. We've really enjoyed interacting with other teams, mentors, the people who created the data. And in that spirit, please do reach out to us if you've got any feedback or suggestions or data or anything. It's all welcome. And I just want to emphasize that one of the strengths of our platform is that it's additive. And we do work with clients to combine their own data that might not be in the public domain with the data that's on our platform. And we've got the expertise to create bespoke solutions in order to meet the particular business needs of a client. So with that, I'd like to thank you for your attention, and I'm happy to take any questions.
Thank you, Adam. I've got a couple of questions coming in from the Q&A. I can read them out if that's helpful.
Yes, please, yeah.
Sure. So how exactly did you or are you planning to tackle the specific SME challenge you outlined in your slides?
Yeah, so as I've said in the presentation, unfortunately, when we came to look at the data, we found that the data just wasn't good enough to really address the challenge we have. So we sort of made the most of of the data that we did have. And we've been able to provide cash flow projections for those companies, but we just don't think that we think the technology is okay, but we don't think that the insights that the technology gleans from the data are actually would actually apply in the real world. So what we'd be looking for in future iterations of the sandbox, I do want to say that we're very keen to engage with the FCA and the City of London Corporation with future iterations, perhaps even having some input on the kind of data that would be useful for this use case. What we'd be looking for would be data that was more realistic, perhaps even anonymized data rather than synthetic data, and actually really data that we have prospects to get hold of in the real world, perhaps with open banking, so that we can take the use case that we develop within the sandbox and then take that out, and then take that out into the real world for our clients.
Thanks, Adam. I think that's a really important point on the data set. I think that's all we want to do in terms of this was a pilot. We want to learn, the lessons on, what worked and what didn't, and in particular on the data set. I think pursuing some of those opportunities with anonymized real data alongside synthetic is definitely something that we want to consider.
Oh, that's music to my ears.
So final question from Nicholas, who will be your main targeted client, your main type of client, excuse me?
So as I said already, we have got a lot of clients, and they come from all sorts of sectors, both in the private sector and in the public sector. So we're really looking for solutions that can serve those clients, but it's a very broad mix, and it's really anybody who does business with other companies. We look at all the companies across the UK and Ireland. And we also look at global, internationally at quoted companies. So it's anybody who's doing business with those companies is a potential client for us. And, our ambition with the sandbox, it hasn't quite come to fruition, but I'm sure we'll get there, is to be able to get more real-time estimates, especially nowadays, with COVID. And, it's not likely that this is going to be the last such situation that we face. We're probably going to face similar fast-moving situations in the future, where we need to have access to data that's more current than what we would get from the financial statements. So it's basically anybody who works with companies are a target client for us.
Brilliant, thanks, Adam. With that, I'm going to hand over to the team at Fractal Labs if Nick and Sanadji are online.
Okay, hello everyone. I'm Nicholas, I'm CEO of Fractal, and I'm joined by Sanadji, our head of data engineering. So first, Fractal is a platform powering SME payments and financial services by providing a smarter and more affordable and faster payments engine built on open banking and a business insights platform with cash flow forecasting at its core. The objective is ultimately delivering the right financial product to the right SME at the right time. In the sandbox, we focused on using the data to enhance our cash flow forecasting engine to improve access to SME finance. Here are the key features of the Fractal platform. Payments are initiated using account-to-account bank transfers. Behind the scenes, the Fractal forecasting engine predicts future cash flow. This analysis is combined with the lender's credit risk model to determine loan eligibility, and financing opportunities are returned to the SME along with a revenue-based repayment plan. Our focus is on facilitating better business management for SMEs and in turn, less credit risk for lenders. Let's take a closer look. Here's an example journey of the Fractal platform in action. So Fractal makes onboarding SMEs seamless, connecting directly to Companies House or facilitating account creation by sole traders. We connect to 99% of all bank accounts in the UK through open banking and are able to aggregate permission-based data from any number of transactional bank accounts. We also connect to major cloud accounting platforms such as Xero and QuickBooks, pulling in invoices, bills, and management accounts. Once the data is connected, our platform immediately drives financial insights for the SME. For instance, through deep linking with our partners at Untitled, the UK's personal tax app, we are able to surface future tax liabilities. Last month, alongside Untitled, Fractal was the first business to ever initiate an open banking payment directly to HMRC. But rather than paying the tax immediately, the business might also set up a virtual tax savings pot. Our research indicates unforeseen tax bills are one of the top reasons SMEs need financing. Our analytics engine also picks up recurring transactions. In this example, Fractal initiates a standing order, thereby saving the business valuable admin time doing manual payments. Outstanding invoices can also be paid directly from the app. The forecasting engine predicts the impact the payment will have on future cash flow, providing the business with greater visibility into their upcoming needs. When forecasting cash flow, it's important to determine low points in the coming weeks and months. Behind the scenes, our lending partners use the connected data to determine credit eligibility and automatically underwrite a loan. In this example, a credit card with a £25,000 spending limit shores up any shortfall in the coming months. Digital processes make lending more efficient, and embedded finance reduces the risk for both SMEs and lenders. Over to you, Senhaji.
Hello, everyone. I'm Senhaji, Head and Data Engineer at Fractal Labs. Thank you, Nick, for presenting our product using payment to automate banking services, helping SMEs with their cash flow forecast and enabling their loan applications. Our approach was data-driven. We extracted valuable insight that drive automated and impartial decision-making by financial institutions for small businesses and individual traders. Using Sandbox dataset, we trained multiple models to build a solid forecast, building a complete view of what, when, and how much cash flow would be available for the SMEs. We use two different approaches. The first one is clustering transactional data using frequency trees to identify recurrent patterns. The second one is an additive model for nonlinear trend fitting with seasonality to predict trend and seasonality within the time series. In both cases, we managed to use the sandbox data to measure accuracy and fine-tune the models. We present now some analysis of the result we managed to extract from the data. On the left figure, we have a business account for which we cluster the bank transactions based on recurrency, amount, category, and counterparty. Each dot is a transaction, each color is a cluster. We then analyze each cluster and projected a prediction into the future. Our previous model was less accurate. Current model has less than 30% NPE error. It did also allow us to validate predictions on categories like salaries and loan repayment. On the right figure, we have the same business account. This time we focused on accumulated cash balance, for which we identified the trend, the weekly, monthly, quarterly seasonality, and we used the regression to project it and get a forecast. This is an out sample testing. We trained 9 months. And we predicted on 3 months. The orange graph is actual, the bold is historical, and the blue is the fractal forecast. As you can see, the prediction is really accurate, and we have also a cloud error that increases over time. Although the timing of these pilots, the quality and type of data were an issue at first, but we managed to really extract value from these pilots. We want to thank the FCA Sandbox team that enabled this project for Fractal and provided the data, the framework, and the support.
As next steps, we want to reach out to any businesses looking to offer SME clients value-added solutions, including faster payments and smarter cash flow forecasting, and lenders who want to drive profitable revenue from this underserved segment of the economy. It's 2021, embedded finance is here. Let's make cash flow. Thanks for your attention.
Brilliant, thanks Nick and thanks Senhaji. Any questions for the team at Fractal Labs? We've got a couple of minutes for those.
I think we have a question from Stuart, Adam, probably this was for Adam. We have a question from Ian. If Fractal Watch improvement were made to the sandbox data, thanks. We basically use the data as raw initially, but we extracted some, so we pre-process it basically. We processed the categories and the merchant, and we also processed the amount to get it to in a format we can actually use it for the prediction. I hope this one help Ian Major.
We've got one from Timothy. Are you targeting lenders internationally as well as in the UK?
We're primarily UK focused, but our payments license under PSD2 is valid across Europe. We also are working with other players in the US and Australia, but that is not based on our license and more based on the fact that cash flow forecasting, so long as we are able to pick up transactional bank data or accounting information, is valid. So the short answer is yes, but our primary focus is the UK and Europe.
And I've got one from the chat box, and once again, please do use the Q&A tool. Can you please explain your data aggregation tool? Can you aggregate multiple transactions and data sources?
Yes, we do. We basically use the banking transactions at first to do a cash flow forecast. We use user inputs to improve these forecasts. So those are data that's provided by the users. We also use accounting data, so we use bills and invoices to strengthen the forecast accuracy. So the baseline for the forecast is around like 30% error, and we can decrease that error to less than 10% with the other data sets that we get and data sources.
And through open banking connections, we have 99% bank coverage in the UK. So we're able to take from basically any bank in the UK.
Perfect. And then finally, if you can add anything to this that you've not already covered, but hi Fractal, how did you use the sandbox data?
So Sanhaji, maybe you want to briefly summarize that again?
Well, to summarize, so we really focused on the banking transactions, and we basically split those by entity, so by SME company, and then we even split it by accounts. So all the analysis we did are account based, and we focused on a couple of features from the data. We focused on the merchant, which counterparty basically is on the transaction. We focused on the category, so basically from the transaction descriptions, extract some category and use that to categorize the transactions and categorize the cash flows. Amount and dates are very important, so we use those to aggregate and project into the future. So those are the main features and data we got.
Brilliant. Thank you. I think there are a couple of questions in the Q&A if the Fractal team want to have a look at those. But otherwise, thank you. And I'm going to move us on now to Untangled Finance. Thank you very much.
Hi everyone, Quan and I are co-founders of Untangled Finance. We have been working in fintech and blockchain space since 2017, and our product is being used by banks in Africa. So we started Untangled Finance during the COVID lockdown. SMEs took the biggest hit as a result of COVID, and many of them will be struggling to operate and repay their bounce back loans. These loans asset originators need cheap and diversified funding, and investors, on the other hand, are looking to invest in higher yielding assets. However, at the moment, the capital market money is not flowing back to the real economy very efficiently because the securitization process is very complex, with very high transaction costs for the smaller portfolios, and there is lack of transparency. One of the things that caused 2008 financial crisis was that there was a loss of nexus between the assets and also the note holders. So Untangled Finance is a digital securitization platform. By incorporating blockchain tokenization, automated legal documentation, and live reporting, advanced analytics, we make securitization process of SME loans, invoices, and green assets cheaper, simpler, and more transparent. With the FCA sandbox data, we were able to train our platform and have completed the third part of our solution, which is the portfolio analytics part. Therefore, today I will demonstrate an end-to-end securitization process for a portfolio of SME loans downloaded from the FCA sandbox. And I will demonstrate including uploading the loan asset, structuring the asset pool, sell the pool to an SPV or another originator, structuring the securities issuance, and also redemption. So the process starts off with an asset originator. First is to create a pool by filling in some information of the assets for sale. To transfer assets into the pool with a set of eligibility criteria, there needs to be an asset transfer agreement, which is generated by answering a set of questionnaires on our platform. So these are smart legal clauses that contain computation within them. Once executed, we will be able to track performance of triggers of these items. The next step is to upload loan assets in a formal spreadsheet. We follow the European Central Bank standards, so most of the fields can be identified automatically. If not, the user can select from the drop-down box or self-define. After validation, these 201 assets that are worth £12.8 million would be tokenized. Each loan is represented by a unique token with a unique obligor ID, payment terms, etc. You can click into these tokens to see underlying information. And also the record will be stored on the public blockchain, which you can have access to. Now, after filling some pool sale information, this loan portfolio offer will appear on our private marketplace for institutional investors. Here is an example of an investor trying to place a bid. When the sale expires, the seller is able to review the bids and select the preferred bidder. Successful bidder will pay for their bids, and then the seller will then transfer the asset pool to the new owner. So now it has been transferred. To issue security from the pool, the issuer or the new owner of this asset will go through questionnaires so that subscription agreements and also investor prospectus can be generated. So this is to approve. We ran a Dutch auction for securities issuance. It works on a reducing prices or increasing yield basis. Auction will be closed when order is fulfilled or when the time is expired. So at any time, investors can access portfolio and on the latest performance of these assets. They can also define their own performance metrics, and our platform will be able to provide report based on that. So these are the data. The underlying loan repayment is tracked, as you can see from the transaction history here. Once the pool has enough to make a redemption as per the legal agreement, the payment will be made to the note holder in accordance with the pool payment waterfall. And of course, all these are reflected on the public blockchain. So you can see here that now the note has been, redemption has completed. Now let's go back to my presentation. So here are some of the use cases that our platform is capable of facilitating right at this moment. Because of the setup of our platform, to adapt for a new use case is very easy for us because we are done by building blocks. There's a public blockchain, there is a token layer, there is a smart contract layer containing business logic, and then the UX, UI in the front. So with the help of FCA, not only we have data, we have been able to access to a lot of useful data. We also had some very interesting conversations with many of the mentors, and these are potential business company investors. Now we have arranged a few follow-up conversations already. As part of this final demo, we're looking forward to have more business partners like originators, institutional investors, and of course, company investors who want to join us in making funding to SMEs cheaper and more efficient. Thank you.
Excellent. Thank you very much for that. So have we got any questions for Untangled Finance? I've got a question from Chris. Do you guys want me to read it out, or have you got it in front of you?
Yes, I got it. Okay, so this is a question that whether our solution is being used in Africa. So we have another venture. We've been working in blockchain space since 2017. Our first solution was to is supply chain financing. So we work on the origination part. We help banks to lend based on invoices, collateral, and other type of collateral like inventory, purchase orders, etc. Is that solution that is now being used by some banks in Africa?
So Untangled Finance is targeted at more developed market like the UK.
Yeah. Is there a special reason why it has been launched, adopted there? Okay, so that's that I have answered that. Which country are using it? So the supply chain origins.
Yeah.
Chongqing.
So second question is, apologize if I miss, is Chongqing available within this tool, operating agency methodology-based modeling? That's right. So basically with our pool, you can issue two types of node tokens. We call them payment obligation token. So one is the senior obligation token and the SOT, and the other one is JOT, which is junior obligation token. So chunking is possible. And for certain asset class like SME loans and invoices, we do follow the rating agencies' criteria in terms of exclusion eligibilities and reserves calculations.
Now the next question, how do users carry out loan due diligence? Okay, so when the assets are uploaded, there needs to be a validator, and it's typically our accountants which will perform due diligence on these assets. There wasn't enough time for us to demo that, but it's a process relating to that happens on our platform as well, and the validator will have to approve it. So our personal data is stored on public blockchain or outside the blockchain?
That's right. So the personal data is stored outside of the blockchain. So we only store on the blockchain some pertinent information about the assets, but no personal data on that. The personal data is stored in centralized relational database.
How do you collect low-level data from Bangkok?
Yeah, so that is possible either through daily secure file uploads or through APIs. So as Manray demonstrated, you can see there's a mapping with the data field between the originator's data set and our platform according to the European Central Bank data set.
So we're trying to make ourselves as flexible, as adaptive as possible. So starting the lowest integration is just a daily upload of spreadsheet to a next level, which is the API connection. And we have a lot of experience on that, working with banks in the last 3-4 years. And then the ultimate, which we are very future-proof, is also that we're working towards a scenario where the assets are originated in a token form. There is no longer need of paper documentation, but our technology and solution is capable of all three. So we can work with the existing and the future. Can asset be, sorry, are we running out of time?
Yeah, we're just out, but if you guys wouldn't mind answering that in the chat, that would be great. And then we can we can make sure everyone gets their questions answered. So thanks, guys. Thank you so much for presenting. I'm going to move us on to our final team. So it's Alexis Bell from Sota Signal Analytics. Thank you.
I'm Alexis Bell. I'm the founder of Fraud Doctor and the visionary for the Sota Signal Analytics team. I'm excited to be showing you our results, addressing advanced analytics to improve modeling and risk assessment. Sota is an early stage, first to market solution that signals potential risk and uncertainty in company financials. Whether you're a large or small entity, confidence in company financials is at the core of our collective economy and society as a whole. Weaknesses in corporate financial reporting negatively impacts every part of society. If you fall into one of these categories, you are impacted by what occurs in the market. People can lose their investments. Others can lose their access to credit. Confidence degrades. In an attempt to solve this problem, existing solutions have tried to scrape websites looking for patterns. Others have tried to analyze the news, looking for early indicators. Here's the deal. We know that it typically takes over 2 years before anyone realizes there's a problem, and we all find out about it when it hits the news. By the time major misstatements hit the news, it's too late. By then, the damage has already been done. There's a more effective, objective, and timely way to solve this problem. As a forensic accountant, I've spent nearly 20 years across various industries using science to look for patterns of human behavior. If I was investigating a case for a particular allegation of fraud, it was always in the back of my mind, what if I missed something really huge behind me? This analysis helped me ensure I was looking in the right place. Over time, I was able to identify risk with greater accuracy and, even more importantly, to understand what it looks like in the data before that decision was made. We call this the signal of pressure. So why do I think the best way to understand a company's risk is to read their financials? I have an interesting case study to share with you. I don't have time to go into it in detail right now. We do have a 15-minute video that does that, but for right now, I want to call out just a few of the highlights. Cases like Tango highlight deficiencies in existing approaches, especially those with AI that are not grounded in domain expertise. Many existing risk solutions rely too heavily on one data point, which is a model risk concern. As you can see here, over-reliance on the increasing stock price, the blue arrow, allowed Tango to misrepresent the company's financial health. In this case, inflated financials persisted for years. The first sign of trouble was a year after the IPO, when short sellers sounded the alarm. We wanted to know how much sooner would Sota have seen any risks for material misstatements. Well, let's take a look. Not only did we detect the specific fraud schemes alleged by the United States SEC and later admitted to by Tango's executives, the ones in the yellow, but we identified risk of additional schemes, the ones in red, that could have been pursued had they not remained hidden. Sota identified the susceptibility of material misstatements while it was still private before the IPO in 2011 and after the IPO. Although Sota's algorithms were originally designed for publicly traded companies, they can equally be applied to private companies when the data is available. The sandbox helped us to prove our concept and accelerated our commercial plans. The FCA and the COLC's Digital Sandbox Pilot gave us access to mentors who helped us to build it the right way from the start. In less than 2 months, we've been able to automate and scale the previously manual analysis process into the groundbreaking solution we are bringing to market. We have ingested all of the current and historical fundamentals for every publicly listed company traded on the US and UK stock exchanges. We've embedded the algorithms into an existing AI-enabled analytics engine. And finally, using live data, we have tested the performance of Sota against over 33,000 restatement impact years. For the companies traded on exchanges in the United States, we tested over 15,000 restatement impact years and had an efficacy rate of 87%. A unique aspect of Sota is that it's industry agnostic. It works equally well across all industries. Another really important aspect is that it is currency independent, which means that it does not matter what accounting system is used by a particular country. To illustrate this point, let's take a look at testing we conducted for the UK. For companies traded on exchanges in the United Kingdom, we tested against 18,000 restatement impact years and had an efficacy rate of 85%. This is really, really exciting for us because these results are before implementing any machine learning. This is solely based on domain expertise. We anticipate that these efficacy rates will increase as we continue to tune the Sota scores. We also attempted to validate Sota for SMEs. However, the data available was insufficient for responsible testing. The pandemic has created an urgent need to risk score companies and monitor across markets in financial distress. We know that lending is often being undertaken with little knowledge of counterparties. You need the ability to triage a company during an unprecedented time and understand the true financial health of every company you touch. Board of directors are under increased scrutiny to demonstrate adequate duty of care. Asset managers or insurers with large portfolios trying to highlight emerging risks can ingest Sota scores into customizable dashboards in our platform or theirs. While Sota is not a lending decision tool, it does augment your understanding about a company. It does provide you with a direction of inquiry. It tells you precisely what areas need your attention. Some of you will be interested in your own company or the portfolio you are managing, while regulators will be interested to uncover potential risks across the whole system. Imagine what you could do when you could see if an entire market or specific sector was experiencing pressure. Maybe you would offer help or make monetary policy adaptations. Sota is flexible enough to answer all these questions. Sota is scalable, customizable, and reliable. If you have a need for any of the areas we've covered here today, or if you want to help us grow, we want to hear from you. So thank you. I'm ready to take your questions.
Brilliant. Thank you, Alexis. Let's see what we've got. Topical question. Do you want me to read them out for you, Alexis? Is that helpful?
Yes, yeah.
So I've got from Anonymous, did you pick up Patisserie Valerie?
We did. We did pick them up. We scored them. I don't remember the exact scores off the top of my head. Paul, do you remember? Paul Dunlop is here. He's a partner at Fraud Doctor.
Yeah, the ticket cake is very familiar to us, as are many of the other cases in the news. Obviously here, while there's ongoing litigation, we'd limit what we'd say, but we absolutely scored it, and we'd be more than happy to share those scores offline if the person asking the question, anybody else wants to send us a question directly.
Great. Any final questions for Sota? Great. Okay. Thanks, guys. So we've reached the end of our 6 teams. Now it's just for me to wrap up. So thanks everyone for joining. I really appreciate you taking the time. Thanks for the teams for their presentations and for participating in the sandbox. And thanks especially to all of you who've joined us today and asked your questions. Next steps, this was a pilot. The object, obviously, as well as developing the use cases and trying to provide a useful service to all of our participant teams, was to trial the approach, trial the technology, trial the data in the pilot and see what we can learn and see if there's appetite and enthusiasm to create a more permanent fixture, a more permanent version of the Digital Sandbox architecture so that we can continue to support different use cases, different industry-wide challenges. So do keep in touch. We'll obviously let you guys, the market participants, know what our plans for the future are, but suffice to say we've learned a lot during this project, and we want to put those learnings into future iterations of this process and product. So the contact details are there. Do keep in touch. So digital.sandbox@fca.org.uk, or do reach out to any of the team here across the FCA or indeed the City of London Corporation to get in touch, to find out next steps, to continue to ask questions of the team or any of the above. So thanks again for joining, and hope to hear from you all soon. Thank you.